You also outline how maybe perhaps the better option is to be invested in gold as part of the wealth preservation strategy. And that's what I want to dig into a little bit more here. Gold, essential part of the book here, Jim. And I like how you mentioned, just like you don't buy flood insurance when we're already in the midst of the flood, right, the same way we should be looking and viewing gold.
Well, what I did, I just kind of gave you the science and how it's used, but I gave a concrete example. I had two individuals, Sue and Joe. They're the same age. They go to work for two different companies. They make the same salary, and both of them get this 401k choice. But I set the date, I believe it was December 1999. And then they go on for to the end of 2017, and then they both retire again on the same day. Sue decides not to join the 401k. She takes her annual $10,000 bonus and puts it all in gold. Joe joins the 401k, takes the same $10,000 bonus and puts it all in stocks. And then I go all the way through the 17-year period from 99 or 18-year period from 99 to 2017, and then they both retire. They both Sue doesn't have to cash out anything; she has her gold. Joe cashes out his 401k by taking a distribution, and then they sell their assets for cash. And everyone says, "Well, Joe must have done better. He was in the stock market. We had this bull market." Right. And I show that Sue actually did better. After taxes, Sue had a higher return than Joe. She was in 100% gold. Joe was in 100% stocks with a 401k. I gave Joe a dividend. I gave him deferral. I gave him all the tax benefits of a 401k, and he did worse than someone who just invested in gold. Now, critics will say, well, hey, Jim, you picked the bottom of a long period of a long gold bear market from 1980 to 1999. Weren't you sort of favoring Sue by picking the bottom? I said, well, no, because first of all, it was almost 20 years. It's the whole 21st century. Yeah, gold had an incredible rally from 1999 to 2011, but then it had the worst bear market in history from 2011 to 2015. And then we've been in a new bull market beginning in 2015. So Sue's return had to compensate for that bear market where it went down 50%. And then the same thing with stocks. Stocks were, have had the crash in 2008, but then they've had a very strong bull market. So I thought it was fair in the sense that both choices, gold and stocks, went through bull and bear markets. So, and it was a long period of time. I didn't cherry pick, a 3-year window. Right.
No,
it's easy to do. So I thought it was a fair comparison.
It was a fair comparison and great example.
Yeah, and in the real world, you would never do 100% gold and you would never do 100% stocks. My point really is, and I'm not anti-401k, I am anti-manipulation. So what I say to people is, look, put something in the 401k, and by the way, you can buy gold in a 401k, or mix it up, buy some physical gold, have a 401k. Don't just have stocks, have some cash. And actually, the best return would have been a blended return. But the gold did very well, held its own, and that's something you'll never hear from Harvard or the University of Chicago.
Jim, it's easy when we're covering the gold market to obviously get bogged down by the daily price movements. But behind the scenes, there's a lot of action happening on the central bank front with who's buying and who's selling. Obviously, we saw the news coming out of Venezuela selling a big chunk of their gold for liquidity. Do you think that that's a trend we can see more of? We always talk about central banks buying gold, but could we see more sellers here?
Well, you'll see sellers. Miners are sellers. They're not countries. They're mostly private. Some governments control their mines. Of course, miners are supposed to be selling gold. That's what they do. The question is, who are the buyers? Number one. Number two, are any central banks selling? Now, from you start in 1971 if you want, when Nixon shut the gold window, until 2010, central banks were net sellers. There was manipulation in the late 70s. The United States sold 1,000 tons, and we sort of twisted the IMF's arm to sell 700 tons. So there was 1,700 tons of gold dumped on the market in an attempt to suppress the price in the late 70s. Then the U.S. stopped coal. From 1980 until today, the U.S. has barely sold an ounce. We got to 8,133 tons in 1980, and we've been there ever since. Interesting that the U.S. stopped selling gold 30 years ago. However, we had friends, and in the 1990s, we got the UK to sell their gold, most of it. In the early 2000s, it was Switzerland. In 2010, it was the IMF again. They dumped another 400 tons. So there was gold selling going on the entire time. Even our friends in Canada, they sold their last ounce. I think most coin collectors have more gold than Canada at this point. But the point being, they ran out. And in 2010, central banks stopped selling gold. So the buyers continued. The buyers we know are Russia, China, Turkey, Iran through illegal means, Kazakhstan, Azerbaijan, Mexico, Vietnam. They're all buyers of gold, but there are no central bank sellers, none. So if you're a buyer, where's the gold coming from? Well, mining output. But, the miners sell to refineries, and the refineries have customers. It could be jewelry, watchmakers, standing orders. They won't take new orders at this point. They're backlogged. They can't meet the demand they've got. If you're not known to a refiner and you call up and say, hey, I'd like to buy 10 tons of gold, they'll say, sorry, sold out. So that's a very, very important thing. Now, with regard to Venezuela, it's very interesting, Danielle. The gold you're talking about are the gold reserves, and you're right. Part of them are being held hostage by the Bank of England. Venezuela called the Bank of England, which is their custodian, said, please send us the gold. And the Bank of England said no. And that's something I mentioned in the first page, or second page rather, of my first book, Currency Wars, in 2011, so 8 years ago.
Yes.
I said, get your money out of custody with the Fed, the Bank of England, because they're going to freeze it when they feel like it. And here we have a real-world example of the Bank of England telling Venezuela they can't have their gold. The other gold reserves have been hawked to, some of it was pledged to Goldman Sachs years ago, some of it's pledged to Russia. So they really don't have any reserves that they can get their hand on. But there's mining output in Venezuela. Now, these are, I recently spoke to a Turkish government official about this. I throw Turkey in there. I'll come back to the connection. These are miners in the most desperate circumstances. They're basically impoverished people on their hands and knees, picking through rocks. Don't picture some, Barrick Gold or Newmont Gold, sophisticated mining operation. These are people who are literally digging in mud. They're starving, so they're eating the wildlife around them. So environmentalists are actually worried about species being wiped out by hungry people eating, jaguars or whatever they can get their hands on. But that's new mining output from Venezuela. Guess where it's going? I've again, through government sources, that I thought maybe that gold was going to Russia. It's going to Turkey. And Turkey has built a system of refineries. And then Turkey's refining this Venezuelan gold. So this is new output. And they're selling it. They're keeping some for themselves, but they're selling it to Iran and to Russia. So the pipeline is still working. There is still new gold coming out. But the bottom line, Danielle, is that central banks are still are buying, certain ones are buying hand over fist. Output has leveled off around 4,000 tons a year, a little bit less, 3,700 tons a year. Has not varied much in the last 6 years. So I don't want to get into peak gold because I'm not a geologist, but it looks like gold output is flat. Gold demand is rising. And that's a very favorable long-term setup for gold prices, obviously.
I want to turn to China and Russia now and actually read something from your book, Aftermath, Jim. You say the two countries in the world that have been most explicit about their desire to overthrow the rule of the U.S. dollar are the same two countries that have acquired more gold than any others in the past 10 years, Russia and China. Now their plans to bury the dollar have moved beyond wishful thinking to active measures.
Right. Well, so let's put all the pieces together. So the acquisition of gold, in some ways, is old news. This is something we pointed out to the Pentagon, the Defense Department in 2009, when we did that war game, and we invented a scenario where Russia and China were acquiring all this gold. Well, over the next 10 years, they did exactly what we warned the Pentagon about in 2009. Russia has more than tripled its gold reserves. China has more than tripled its gold reserves. So they're piling up all this gold. And I asked the question kind of rhetorically because I know the answer. Are they stupid? Or do they see something coming that most people don't? Right. Well, they're not stupid. Clearly, it's the latter. But what is it that's coming? So you have a lot of gold. Okay, that's a position of strength. But we're not going to sort of mint little gold coins and pass them around. What they're doing, Russia and China are doing two things, several things at once. Number one, they're building their own internet. It would connect their people and it would connect them with each other, run over their own internet, fiber optic, or cable pipelines. It would not necessarily intersect with what we call the World Wide Web at any point. So they're building their own internet. They're also creating cryptocurrencies. Now, this is not Bitcoin. I'm not saying run out and buy Bitcoin. I'm a pretty well-known Bitcoin critic. But they could create their own currency for their own purposes, call it a Putin coin or Xi coin or whatever. And now here's what you do. You bring in membership. This is like the anti-IMF. And they would start to trade with each other, and they would use this new currency to keep score, because that's one of the roles of any currency, which is a unit of account. And you could give it a fixed value. You could say one coin, one of these Russian coins, equals one SDR, for example. That's a special drawing right from the IMF. So just to be clear, I'm not talking about the ruble. I'm not talking about the Chinese yuan. Those are not ready for prime time when it comes to reserve currencies. But this new currency. So now you can have a system where North Korea sells weapons to Iran, sells missiles to Iran. Iran sells oil to China. China sells infrastructure to Russia. Russia sells military equipment to China and to Turkey. Everyone takes a vacation in Turkey. And you've got all this trade going on among these participants. There's no reason why it couldn't include Brazil and some others. You keep all the accounts, the due to and the due from, in these new currencies. And then periodically, it could be quarterly, twice a year, once a year, whatever, you settle up in physical gold. Now, bear in mind, these are net settlements. And this is critical because net settlements are much smaller than gross settlements. It's not as if every transaction, every sale of a missile, every sale of a tanker of oil has to be paid for on a gross basis in gold. No, you would just keep score in these units, the cryptocurrency as I call it, and then at some point, again, you would net out. So I owe you some money for stuff I bought from you. You owe me money for some stuff you bought from me. Well, the net could be relatively small, and then we settle up the net in gold. So the amount of gold you need to do that is much less than you would need to either back the currency dollar for dollar or unit for unit, or to settle everything in gold. This is a completely feasible gold-backed crypto system for trading among countries that would pick their own membership. Notice what's missing. There's no dollar in everything I just described.
How far are we from that reality, Jim?
We're not far, because they've got the gold. They're still buying more. Don't get me wrong. I'm sure China wants to get over 8,000 tons, so they have more than the U.S. Russia, 20% of their reserves are in gold. 20%. And they're dumping treasuries. So Russia is very close to being completely out of U.S. dollars, and they're on their way to getting, a third or more of their reserves in gold. So Russia is actually on a gold to GDP basis, which is one of my favorite ratios. It's one that I look at. I call it real money to real economy. Russia has the strongest reserve position in the world. They have about 6% gold. The U.S. Is about 1.7%, give or take. So they've got the gold, even though they're acquiring more. The technology is very far along. I mean, blockchain is not that, it requires some skill, but it's not that difficult to do. And then all they remain, they're already trading with each other. North Korea is already shipping weapons to Iran. Iran is already shipping oil to China. So they just have to have a kind of mini Bretton Woods,
right.
An Asian Bretton Woods, and pin all this down and then launch it. And then at that point, none of them need dollars.
One day I just want to go country by country with you, Jim, and break it down. So much good stuff in Aftermath. Before I let you go, one thing you brought up on Twitter yesterday, having to do with Germany, and you outlined how the people of Germany now hold more gold than the Bundesbank.
Right. That's been a close race for a while. And by the way, the Deutsche Bundesbank, which is the German central bank, I have to check. I think they're number two on the list, but it's certainly top five. So it's the United States, I believe Germany's second, IMF is third, and then China and Russia not far behind. France and Italy are right there. I'm kind of naming the top 10, but they're all bunched together at around 2,000 or 3,000 tons, with the United States kind of head and shoulders at 8,000 tons. So the European countries, if they combine their gold, all the members of the Eurozone, they would have 10,000 tons. But taking the countries individually, Germany is one of the biggest. I think second in the world at around 3,000 tons, but which is a lot of gold, as you know. But I was surprised to see the German people had slightly more, about 4,000 tons. Number one. Also, the Deutsche Bundesbank has been acquiring gold. I mentioned that there have been a lot of sellers, which there were, including Switzerland, France, and the UK and others. But the German Bundesbank is actually buying gold. So the German central bank has more. The German people have more. They have more than their own central bank. That's a player I had not focused on as much. Obviously, I watch Russia and China and Iran, Turkey, and others very closely. But even our closest allies and countries deeply embedded in the Western financial system, at least some of them are getting more gold.
And they really also started the repatriation movement that we're still seeing.
Right, and that's right. There was a lot of skepticism about that, as if you could sort of grab the bars out of the Federal Reserve and put them on a plane and have them to Germany the next day. That was never true. A couple of things people don't realize: those bars of gold at the Federal Reserve, and that they got 6,000 tons in the basement there on Liberty Street, Maiden Lane rather, in Lower Manhattan. They're old bars. A lot of those bars have been there since the 1920s, so they're not what they call good delivery bars. I mean, it's real gold. The gold's there and it's real gold, so I'm not disputing that. But before they ever got to Germany, they sent them to Switzerland to be melted down and re-refined into a higher standard. So 4 nines, 99.99% pure gold, and whether they took 400-ounce bars or these 1 kilo bars that China prefers, not clear. But they had to melt down that Fed gold because it was kind of junky gold into something that would meet modern standards. And Germany never wanted all their gold back. This was when that order was given or that request was made, it was an election year in Germany, and Angela Merkel needed one of the right-wing parties to join her coalition.
Right.
And they were calling for repatriation. So she did something, but she still didn't take it all back. They need some of that gold in New York and London.